Hey everyone, welcome back to the Crypto Code. This dip looks brutal, but the real question is whether it's the reset that finally changes how Bitcoin is valued. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice, so do your own research before you make any crypto trades. Okay, so when Bitcoin drops, fear spikes, and the timeline turns into doom posts overnight. But the framework we're using today is simple. This pain can be healthy, because it forces Bitcoin to break out of its tech stock behavior. Here's why. Bitcoin often trades like software because it's owned and positioned like software. Same investor base, same liquidity pools, and most importantly, the same leverage. When risk gets cut and margin calls hit, people don't sell what they want, they sell what they can. Bitcoin gets sold right alongside high beta tech, even if nothing about Bitcoin's fundamentals changed. And that's the disconnect. Bitcoin isn't a company. It doesn't need earnings, buybacks, or quarterly growth stories. Bitcoin is money, scarce, neutral, global, fixed supply. So when it's treated like a leveraged tech trade, that's not Bitcoin failing. That's the market still misunderstanding what it owns. That's also why shakeouts matter. When tourists dominate, short-term players chasing fast upside with leverage, Bitcoin behaves like a leveraged risk trade, and when the cycle flips, those same holders panic, get liquidated, or sell at the worst time. But the upside of a washout is that weak hands rotate out and stronger hands rotate in. More long-term savers, fewer forced sellers. Over time, that's how an asset matures. Now, we're not going to pretend we can call the exact bottom. Bitcoin can chop sideways, it can wick lower. These cycles can take time, but there are signals that suggest we may be closer to late-stage pain than early-stage collapse. One is the percent of Bitcoin supply in profit, how many holders are up versus underwater. When that number sinks toward levels we've seen around major lows, it usually means a lot of damage has already happened. Sentiment is crushed, sellers get exhausted, and capitulation is underway. That doesn't guarantee a bottom, but it does tell us the market is already under real stress. Another is the Mayer multiple, Bitcoin's price relative to the longer-term trend, usually the 200-day moving average. When that indicator slides into deep value territory, it's basically saying Bitcoin is historically cheap relative to its trend. That doesn't guarantee an instant bounce, but it does highlight zones where long-term accumulation has often made sense. And here's a mindset shift that tightens the whole picture. Measuring everything in dollars can distort reality because dollars are constantly being debased. Looking at Bitcoin against a harder benchmark like gold can make it clear that Bitcoin has already been grinding through a longer reset, so this dip may be late-stage pain, not the start of a brand new collapse. Which brings us to the real edge in this market. The hardest part of Bitcoin isn't buying or selling, it's holding. Without leverage, without panic, and without risking money, we can't afford to lose. Conviction isn't tested in green candles, it's tested when the chart is ugly and the crowd is loud. So what do we do with this? We stay disciplined, we keep leverage low or zero, we stick to a plan we can survive, and if we're accumulating, structured DCA can help remove the emotion of trying to time the perfect bottom. And most importantly, remember what hasn't changed. The network didn't change, the rules didn't change, and scarcity didn't change. What may be changing is the market's relationship with Bitcoin. So if this reset is flushing out leverage and forcing Bitcoin to stand on its own as a hard asset, we may not be watching Bitcoin break, we may be watching it grow up. Now drop a comment below. Do we think Bitcoin is still trading like tech, or are we finally starting to see that shift? Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.